Illustration number 4, where we need to pass the accounting entries subject to applicability of goods and services tax. Goods and services tax. Now you might have seen that when you pay for any purchases, you may pay for CGST and SGST, right? So always remember 50-50. 50% of revenue collected by way of taxes for the central government, another 50% is collected for the state government. So those things will be called as central GST, goods and services tax, and another one is state GST. Let's see here. Let me explain the conceptual background of goods and services tax and its working. See, the entity XYZ purchases an item, okay, whatever it may be. The cost assumed to be say 10,000 rupees, and XYZ is supposed to pay the tax on that. The tax could be say 5%. Whenever I say the tax 5%, automatically another 5% will be addable. One 5% is for state government, another 5% is for the central government. CGST, SGST. Okay. Central government also runs the government, right? State government also wants some fund for running their government. Central government spends for national highway, army, central universities, colleges and all. State universities are handled by state government, state highways, police stations. All these things are again controlled by the state government. For these things also, of course, the state government is in need of fund. And central government is also in need of fund for central expenses. Even municipality corporations also are in need of fund for sewages, road, okay, and all these things will be there. And cleaning the places and water supply, all these things are under the control of municipality, corporations and metro. They will collect the taxes by way of property tax, sewages tax and water tax. Anyhow, in a broader way, we won't mind about that. In broader way, we will be confining with the two taxes. One is CGST and SGST. State government share and central government share. See, if you are purchasing a commodity for rupees 10,000, automatically you have to pay 5% for the state government, another 5% for the central government. CGST, 5% may be 500 and SGST 500 rupees. One tax, one nation. Before the introduction of this particular taxation, GST, state government has their own taxation, central government had their own taxations. Everything was abolished except a few. This type of new tax was introduced, right? Whatever the tax may be, centrally administered and collected, nicely shared by the state government and central government. If you are buying the commodity from Tamil Nadu, okay, for 10,000 rupees, 500 rupees is for central government, another 500 rupees is for Tamil Nadu government. If you are buying the same commodity from Karnataka, 500 rupees is for the Karnataka, another 500 rupees for the central government. Is that okay? That's how it will be happening. If it is being the union territory, we have the union territory GST, UT Union Territory Goods and Services Tax. If you are procuring anything from UT GST, automatically 5% for the central government, another 5% for the union territory. That's how the things are there. And this CGST will be named as multi-point tax. Multi-point tax. Multi-point tax means anything you add with the purchased item for sale purpose with the profit, you have to subsequently pay the tax. You have to pay the tax subsequently. And the tax paid at the time of procuring the material for supplying the finished goods, right, can be refunded. XYZ, after purchasing this 10,000, plan to sell it for 12,000 rupees. Okay, 12,000 rupees by adding 2,000 rupees profit. Sales. By the time XYZ has to pay the GST, CGST at the rate of 5% on this being 600 and SGST at the rate of 5% on this being 600. Is that okay? Now remember, while purchasing the material, you might have paid the tax for this. You might have paid the tax for this. And while selling, you might have collected this one. This CGST should be payable to the government. This CGST should be payable by government. The CGST what you paid at the time of purchase could have been paid to the government by the seller. By the seller. Saying this statement to the government, sir, I am paying this one. No, sir. What about this payment, sir? If you ask for that, this will be refunded. The refunded will be named as IGST. Okay. Input tax, ITC, simply called that as ITC, or here IGST. Input CGST. That's how we can name it. ITC. We call that being the ITC, input tax credit. So we either name this being input tax credit, but as per the institute material, go this way also. Input CGST and input SGST. Is that okay? This will be now refunded. You have to pay this one. This is payable. This is recoverable. Okay, you recovered this amount 500. You have to pay 600. The different shortage you have to pay by way of cash. Now, how the CGST payment stream is there? Well, let's see that now. If you are being a trader, where you are buying the goods by paying the GST, later by adding the profit you are selling, then of course you have to pay the GST also, right? You have to pay the GST also. Now, XYZ company will maintain three accounts. Will maintain three accounts. One is electronic credit ledger. Another one is electronic cash ledger. E represents electronic cash ledger. One is electronic credit ledger. Another one is electronic liability register. So we have three books. Whatever the tax is supposed to pay to the government will be automatically recorded in electronic liability register. Is that okay? This will be now recorded in the debit side. 600 rupees for CGST. CGST account is separately maintained. SGST account also separately maintained. I will just confine with the CGST only. That 600 will be debited in the electronic liability register because 600 rupees is the revenue amount recoverable. Any amount recoverable is usually debited, right? Similarly, I assume this 600 rupees is recoverable, debited. For whose angle? Government's angle. So we are going to discuss this in the government's angle. You are maintaining these three accounts with the government CGST portal, right? So government says you have sold the goods for 12,000 rupees. For that, 5% share is for me. Give me 600 rupees. It's now pending. Sir, while purchasing the material, I have paid 500 rupees now, sir. Yeah, you can get it back. It will be credited in your electronic credit ledger. Where? In your electronic credit ledger by default credited. Input GST. Input CGST. Is that okay? It is credited here. Clear? Input CGST. Now, on the due date, you have to pay this 600 rupees. How can you make the payment? Through the electronic credit ledger, you can make the payment of this one, 600 rupees. Sir, I have to pay 600. No, already you have to return me 500 rupees. You are talking to the government. You have to return me 500 rupees. That 500 rupees is recorded here and adjusted here. Now 600 rupees I have to pay while purchasing the material. I paid 500 rupees. You need to refund now. Get it refunded. That refunded amount can be used for settling this money. But there is still shortage is there. 100 rupees shortage is there. How can I make the payment? That payment could be made through electronic cash ledger, 100 rupees. Okay. See, in electronic credit ledger, the balance comes in the credit side through all the purchases. Whatever the purchases you make by paying the GST automatically available in the credit ledger. Right, electronic credit ledger in credit side. Whatever the sales you do, automatically the tax on the sales will be debited in the electronic liability register. By the time of tax payment, that 600 is set off with that 500 rupees. Whenever there's a shortage, that shortage will be adjusted through electronic cash ledger. How do I get the fund in electronic cash ledger? It's manual. You have to do it through your bank account. Through your bank account. You may maintain a bank account, right? In your bank account, debit and credit side. This is receipt side, this is payment side. You make a payment of rupees 100. This 100 will be recorded in electronic cash ledger. Sir, for me also credit, for this also credit means seems to be illogical. It's not illogical. This is maintained by you. This is maintained by the government. This is government's perspective. This is our perspective. We say it's a receipt. It's a payment. Government, as per their requirement, it will be in the credit side. Like, is that okay? The ulta adjustments you have to understand. These are the system we are usually following in the case of taxation. Now, what is the ultimate tax paid by XYZ to the government? It's very simple. Only the value addition will carry the interest. What is the value addition carried by XYZ in this transaction? Purchased for 10, sold for 12. It means he has added 2000 rupees value as far as concerned. 10,000 rupees, at which value you can purchase only in the wholesale. But I am a retailer. Why do I want to do that retail service? Small buyers cannot capable of purchasing the bulk lot from the wholesaler. So you approach to me, I will be breaking the whole lot into small lots so that you can comfortably purchase. That services is not free. That services also has some cost. What's that? You invest a lot of money and unpack it and pack it small and sell. That value addition is carried over by me. And what is the worth of that? That worth is nothing but the difference between the purchase price and sale price. 2000 rupees is the value addition. Is that okay? For that value addition only, I have to pay tax. What's the 5% on that? 2,000 rupees, 100 rupees. The ultimate tax you paid is only 100. Only 100. Then why such a nonsense comes here? Pay the first at the time of purchasing and get it back at the time of sale. It means a chain. So chain is created in such a way that tax evasion is completely avoided. What happens now? X sells to Y. X sells to Y. Okay, for rupees 100. Y sells it for Z for rupees 120. Z sells to A for 150. A sells to the customer stating 200 rupees. And what is the ultimate tax? We assume the same 5%. If the tax rate being 5% means for the final consumer has to pay the tax at the rate of 5% on this 150, which is, sorry, on the final value of 200 rupees, 10 rupees should be payable. Is that okay? This was the traditional market taxing concept. The tax will be leviable only at the destination finally, right? But what is the trouble comes is very simple. During the final approach, the customer will demand, sir, is there any offer? I don't want the bill. Without bill, can you supply? If you are supplying without bill, the final sale may be only 100 rupees, 200 rupees. Nicely, this 100 rupees is evaded. Evaded means hidden from the government's payment. You are not paying, you are omitting, right? But as per the new model, what happens now? X, Y, Z, A. X sells it for 100, but Y has to pay how much? Another 5 rupees put together. So 105 should be payable. And Y, he has to sell at 120 means Y should collect the tax on 120 and pay it. On 120 it is 6 rupees. You collect and pay. This 5 rupee could be refunded. This 5 rupees is refunded. The first party will pay the tax. The tax payment could be the amount collected while selling the goods, which is 5 rupees. Second party, he has to pay the tax 6 and the tax paid on the purchase will be refunded, so only 1 rupee. And Z while selling to A 150, for that 5% is 7.5. Whatever the tax he paid already can be refunded. He has to pay only 1 rupee 50. And A sells finally to consumer at 200 rupees. For that 5% 10 rupees is payable and A can get the initial tax back, so 7.5. So finally only 2 rupees 50 paise. What is the ultimate value now payable to the government or receivable by the government? Summation of all this value, which is equivalent to 10 rupees. Now what happens now? If Z wants to cheat this 7 rupees 50 paise, he cannot get the 6 rupees back. He cannot get the 6 rupees back. Very simple, no? If Z says that I am going to sell without bill, without tax, in order to reduce the tax. So for 150, sir, you pay only 150, don't pay the 7 rupee 50 paise. I am going to hide it, tax evasion. I plan to go for tax evasion. If I plan to go for tax evasion, I cannot get my 6 rupees back. If I am not able to get the money back, then what is my purchase price? 126. Isn't it? 120 for material, tax amount, if I am not able to get it back, then really I am paying 126. Am I fool to pay 126 for the material? And purchasing for 126 is not at all meaningful at all. Rather than that, I have to always go with the taxing. So because of this chain link between the purchaser and seller goes in number of chain loops, definitely there will not be tax evasion. If there is a tax evasion in GST like multi-point tax, it is just because of a group activity of the entire chain of people, which is rare occasion. Of course, still some fraud happens. You might have heard about now and then. GST to this extent of amount is tax evaded, also found out. Also happens, but this method may be better than this method. Is that okay? That's the thing happens here. I explained here. XYZ purchases, while purchasing, GST is paid, but on selling he gets it back. He gets it back. On sales again he has to pay the tax. This is the tax payable to the seller. Okay, to the seller. This is the tax collected and payable, collected from the buyer, from the buyer. Okay, from buyer. Okay, collected from buyer and payable to government. Payable to government. While making this amount payable to the government, the amount paid to the seller could have been adjusted here in the name of input tax credit. Input tax credit. So this is the logic. Okay. Let's see here. I will now pass the entry in the angle of XYZ related to this one. So XYZ purchases for 10,000 together with the additional payment of 1,000 rupees for CGST and SGST. Overall payment made by XYZ in this case is 11,000 rupees. The entry here being purchases account debit. Purchases account debit. He has paid 10,000 rupees for the purchases and he has paid CGST rupees 500 rupees and SGST also paid okay, also paid 500 rupees. Anyhow, these two are input CGST. You are able to get it refunded. So I name this being input central government goods and services tax. To what? To cash or bank. I assume this is cash payment. So the overall value being 11,000. On sales the entry being, okay, on sales the entry being, so I sold it for how much? 12,000 rupees. So I get cash. How much I am getting? 12,000 rupees plus another 600 plus 600, 1,200. So I am getting 13,200 from my buyer because I am collecting this 600 plus 600 from the buyer, collected from the buyer and later payable. So while collecting, cash account debit 13,200, out of which my share sales only, which is 12,000 rupees, government share, especially central government share CGST 600 and state government share to SGST 600 rupees. Okay, SGST 600 rupees. And don't forget to finally adjust this. I can differentiate this tax being output CGST. Output CGST. Is that okay? Now finally, this is the tax I collected from the customer is going to be payable to the government. The tax I paid to the seller at the time of purchase should be received from the government. So received from the government means it's an asset. So it's in the debit side. Payable will be the liability. So it is in the credit side. Finally, this credit amount payable to the government will be paid out of the input GST. Not only that, if there is any shortage, I have to make the payment through our bank account, electronic cash ledger. Is that okay? So the entry here being output CGST payable to the government account, debit 600 and output SGST payable to government 600 rupees and to input CGST being already available, right? So I paid this amount is my asset. At the time of payment of any purchased goods, any GST paid by you will be refunded. Will be refunded. So it is an asset. Any amount you are supposed to recoverable later is an asset. So it's in debit side. Any amount you collected supposed to be payable will be a liability. So it's in credit side. So the output GST is nothing but you have collected from the buyer and it's supposed to be payable to the government. So it's in the liability side. So finally, I am neutralizing with the payables as well as receivable. These are the payables, these are the receivables. So I am adjusting the receivables with the payables. So inputs is GST, 500 rupees. The difference will be now settled through which account? Electronic cash ledger. Routed through electronic cash ledger, or simply you can name this being cash. Okay, simply it can be named as cash or bank. But this payment is routed through what? Routed through electronic cash ledger, ECL, electronic cash ledger. I hope so you could understand the three accounts. Usually, if you are doing any operations after a registered GST means trader, one is electronic credit ledger, another one is electronic liability register, another one is electronic cash ledger. Electronic liability register is the ledger is to record all the tax payable on output, and electronic credit ledger is nothing but the tax paid at the time of procuring is auto credited in your account. And finally, that electronic credit ledger amount can be used for payment of the electronic liability register. If there is any shortage, that shortage could be transferable from electronic cash ledger. That electronic cash ledger balance could be adjusted through your internal bank account through NEFT payment, RTGS, like you can transfer the fund to electronic cash ledger. From there, this payment is made. So you have to understand these are the three entries where GST is applicable. Is that okay? Come on, make a note of it.